So Ken, good morning. Always glad to talk to you. We've known each other for years. Tell us a little bit about what you're doing with Polaris Consulting and how your background with the USDA feeds into that.
Thanks, Dave. Good to join you. It's always a pleasure, and it's a pleasure of mine to work with Waterways Journal, High Plains Journal, Great Lakes Seaway Review, and the rest of the brands that are a part of that. And it's been exciting to be able to form Polaris Analytics and Consulting 2 years ago when I had the opportunity, after spending about 25 some years with what was originally Sparks Companies, and then became Inform Economics. And then we were acquired by IHS Markit, and then we merged with S&P Global. Then I was given an opportunity to look elsewhere and started Polaris Analytics Consulting, really as a continuation of work that I was doing previously from the standpoint of working with people who are out there trying to make strategic decisions in their business. And a lot of that starts with data, and taking the vast mountains and oceans of data that's available and synthesizing it down into a knowledge set to help people make strategic decisions for their business for that return on investment. And either that return says yes, make an investment, or the return says no, don't go this way. And in essence, I'm coming alongside and working with them as a partner in their business and being that third party part of that activity. In the meanwhile, being able to work with, like I said, Waterways Journal, High Plains Journal, and Great Lakes Seaway Review, writing regular columns for the publications, and for High Plains, running a monthly column named Horizons, where I'm looking at the horizon, what has happened to date, what is on the horizon, what's ahead of us, and then what's over the horizon, the unknown. And that's where the fun begins, if working through some scenarios. My experience goes back to USDA's before Sparks Companies, where I worked for the National Agricultural Statistics Service, setting national crop estimates, and also working in the chemical use area. And then in that area, I was working closely with farmers and the industry, looking at what it is that was being applied to the various crops. And farmers were highly motivated to complete those complicated surveys, because they saw if they fill out these surveys, there's a direct correlation that US EPA, Environmental Protection Agency, will get good information. And now they can assume different things about how much farmers are applying to their fields and to their crops. So it was a very beneficial service for the farmers in particular, but especially for for EPA to have proper information and right information. Spent some time in the transportation group at USDA, and hail from the West Coast, where I spent some time at Washington State University, undergrad, master's degree, and such like that. So at Polaris, work with people in a lot of different areas, whether it's in the writing some columns. I also work with Waterways Journal and collecting information on the barge operators, how many barges they have in operation, and then working with a number of different consulting aspects of the business, whether it's with the Renewable Fuels Association on a couple of projects, to working with due diligence or feasibility or forecasting export throughput for certain facilities, or even looking at the Mississippi River system. What's the impact of low water, high water? What's the economic impact of the system to the nation or to a local region? And also work with people on ports and inland locations, as well as a number of other things. And I've helped work with some people in South America on establishing forecasting procedures for their business. And in the meantime, I do get a chance to speak to a number of groups around the world through various commodity associations. So it's been my pleasure to work with High Plains Journal, speaking at HPJ Live this year, as well as some other events with the different company organization or publications there at Bound Media.
You mentioned how you've been working with data your entire career, and we recently went through a shutdown when some of that data wasn't forthcoming, and recently the shutdown ended, and regular reports like the World Agricultural Supply and Demand Estimates are now available again. Have we learned anything from the most recent one? Were there any surprises?
I think part of the surprise, because if you think about the World Agricultural Supply and Demand Estimates report, it does a number of things. One, it is pulling in crop report information from National Ag Statistics Service, or NASS. And so you're getting in there the area, yield, and production of what took place in the field. And especially we missed October, we got a hybrid in November. And in there, we really missed some of the key period where the crops were being harvested. Enumerators would be going out into the fields and be able to collect objective information. And instead, we got a bit more of a post, if you will, environment of harvest, which is good on one hand. On the other hand, in January, we're supposed to get the final, if you will, area yield production plus December 1 begin grain stocks. But what's interesting from the crop report from NASS was for corn, beans, and wheat. While we saw that the yields that were forecast in September, for example, were quite high relative to where the industry was thinking, when the November crop report came out, it was not cut as much as the industry thought. They thought the numbers on corn, soybeans, especially, would be much lower on yield, and actually were much better than anticipated. In the meantime, despite that cut in production, because there still was a cut, we did get better and improved ending stocks, which is important because when you look around the world, you got to say, what's going to be the supply for the rest of the year from harvest through the rest of the year that you're going to draw down. And we live in an environment where you've got 6 months of production going on. Harvest here in September, October, November for corn and beans. And then in South America, 6 months later, they're harvesting their beans and corn. And so you've got this little dynamic taking place that's quite interesting. The World Agricultural Supply and Demand Estimates Report, or WASDE, really then puts together this fund of the supply side, where they take the production number together with imports and they give you a supply. And you're going, all right, what then is consumption or demand? And what they saw was for corn in particular, much improved corn prospects. And now we're at a record supply of corn production, exports for the new crop year, 25-26. And what that's done is pushed total U.S. exports to a forecast to be second highest in U.S. record. And that's quite remarkable. Mainly it's because of corn. Soybeans are down by quite a bit, and they've been trending down since really 2008-20 when they were a record, and have been sliding ever since. And really because we're in the midst of this U.S.-China trade dilemma on one hand, but at the same time, there's been opportunities elsewhere for soybeans. Wheat has improved as well, so that's been very important that we've seen now after bottoming in 22-23 and 23-24. It's really come back on the volume of wheat exports available. And the same thing on sorghum, we've seen some improvement there into the marketplace. But you look at what's going on in the biofuel sector, certainly more soybeans are going into crush for soybean oil in particular. That's going to meet the requirements for renewable diesel. And we've seen a big increase in the amount of crush capacity that's come online. And we're up about 20% if not more, year on how much more capacity there is to crush soybeans. And so at the same time that you're getting this oil that's really going to be supposed to be going into renewable fuels, you also have soybean meal that comes out, and it's got a lot of opportunity to be fed into some sort of livestock critter or go to the export market for feeding. So you got a lot of unique differences there. Meanwhile, the USDA did keep ethanol flat as far as corn going into that, and did reduce some of their feeding as we see in that place there. So on the crop side of things, you did see some changes globally. They didn't make too many changes as would have been expected. It's a little early because you still are waiting to get South America to plant their soybeans and their main corn crop. And then in the Black Sea area, not as many changes were taking place there, but some of the changes were the U.S., but really with what we saw, reduction in crop, but also reduction in the ending stocks with just some improved usage.
Was there anything surprising, Ken, about how well American corn exports did this year? Was it just the low price, or what other factors came into play?
Certainly the price is always a great fertilizer for people to want to buy into. At the same time that the U.S. had available supplies and that South America was a little bit late on their safrinha corn harvest. And then what we see in some other markets around the world, especially in Mexico, that's our number one market. And they've been buying a lot of corn and feeding a lot of that. And so that's been really important here. And then you're seeing in some of the Central American countries and even in Southeast Asia, been seeing quite a bit of corn being purchased. So there's been some great opportunities, price, value, quality that goes into that marketplace there that have come in. And the U.S. has been competitive out there. And again, with a record corn export potential, it's going to be something special, at least on that side of things, to give corn a marketplace to go to.
Now, Ken, you work with several organizations that market U.S. commodities. What about U.S. soybeans? The mainstream press has paid a lot of attention to the China trade deal, but can you talk a little bit about other markets other than China for U.S. soybeans and how they've been developing?
Yeah, it's rather remarkable when you do look at like the U.S. Soybean Export Council, USEC, and look, there's other commodity associations that work closely together in some of these key foreign markets, such as the U.S. Grains and Bioproducts Council. And will put on regular events, buying events, where they'll bring buyers in from around the different regions that they're hosting events. Then they'll bring exporters in and be able to have a conversation and meet with one another. They'll bring in people such as myself that could be speaking to the markets or speaking about different attributes to the commodities, the U.S. commodities in particular, doing some compare and contrast. And what you're seeing here is that, the old saying, don't put all your eggs in one basket. These U.S. commodity associations have been very active since really 2018. In fact, before 2018, recognizing that there's a growing population in various parts of the world with a increase in per capita GDP capabilities, and their per capita caloric intake has been really important. And so to be able to pivot away from China was an important feature. China's still important to keep our eye on, and that should they come back, because we know one thing about China, they have a light switch mentality. And because they're a centrally controlled government, they can easily turn that light switch up or down, on or off, stop or receive commodities. And we'd seen this with soybeans in the early 2000s when China first really started buying a lot of soybeans in about 2003, 4, and 5. There were periods where China was like, maybe we should not go so fast. And they say that there's some phytosanitary issue. They turn that light switch down to the off position. No more coming from the United States. And then they turn it back on. Then they turn it off. Then they do the same thing with corn. What ended up happening was it opened up opportunities in other parts of the world, like South America, for those farmers to start producing for the export market. And it was almost as if China was trying to steer business in a certain way to try to get production up at the behest of the U.S. farmer. And that's been something that's been going on for a long time in the U.S. economy. And they continue to play this game. And I think that's the challenge here. And the reality is that the commodity associations have been successful to find those other pathways. Maybe it's not a one for one because the Chinese had bought so much, but it's important because what we're seeing population wise, but really from a consumption standpoint, you're seeing some of these economies in Southeast Asia, in the Middle East, North Africa countries that are really improving, as well as Latin America, quite frankly, where you still have some positive population growth, but you're also seeing the caloric intake and the per capita GDP that comes with it for them to be buying what are those products that the soybean meal will go into or the corn will go into. It's going to be a lot of times your proteins, your animals, and they're going to be able to afford these proteins to come into the marketplace here. So that's been important. And for the commodity associations to go in and teach and train and educate people in different regions about how to use the grains or the soybeans or how to cook with it or how to feed better or to be more consistent with its use and be more efficient with it, that's been important. Now, on one hand, that's a benefit because South America still has the same stuff. But the idea is if you have a rising tide, it lifts all boats. A lot of work that USEC and U.S. Grains and Bioproducts Council is doing is somewhat indirectly helping some South America farmers. But in reality, it's really helping U.S. farmers mostly because we're getting in that door and building that trust and that relationship between the exporter and the buyer in those countries.
Again, one of the things that groups like USEC talk about are environmental standards that are increasingly being applied to commodities and how the U.S. usually leads in all those categories of sustainability. When you talk to these groups, do you find that that's the case?
Very much so, David. And especially when you look at some of the rules that are trying to be put into place from EU deforestation, EUDR, something like that. And they've delayed that. It was supposed to have gone into effect a year ago. It looks like it's going to be delayed again another year. And really what they want is certified or certification that the crops and the products coming to the EU were not grown on deforested land, or it was produced in from a jungle area that was tore down and converted over. And it's a way to try to be sustainable. And so there's been some delays. And for the United States, the U.S. farmer is at the heart of it. I use this sort of a principle or framework, the 4 Rs+1, where farmers are reliable. They've been around a long time, doing a good job. You got a reliable system for them to send their grain into and their soybeans. Secondly, they're resilient. They keep coming back all the time. The supply chain for commodities and grains is resilient. You've got multiple options from farm to market. It's resourceful, where you've got a high volume system to collect grain, unlike any in the world, and that you can store the grain for quite a long time under good conditions, unlike in some other parts of the world where they don't use the same approach to handling the grain. And then you've got the whole thing about redundancy, and the standpoint that it's not an either or. There used to be this debate, either you're going to feed people or you're going to fuel people, meaning put fuel into their cars or vehicles. The reality is the farmer has done so well that you've got both and, that you can now plug and participate. And we're seeing that with the soybean sector, where they're building so many crush plants that they can go in not only to use the soybeans that are nearby, there's still plenty available to the market. And you still have opportunities for oil seeds or edible oils to be used in one way, and still the amount of soybean meal that comes that gets to be important otherwise. And then, so it's a plug and participate, but wrapped around all of that, Dave, is what I call the +1 is regenerative. It's a word that's come up and become very popular in the last 5 years or so, in the last decade. Farmers have always been resilient, regenerative, because of where they live. Where they live is where they work, and where they work is where they live. At the end of the day, most of the farms in America, or many of them, are legacy farms. They've been handed down from one generation to the next, multi-generational. I was speaking with a farmer last week, 7th generation farmer, and he's got children. He hopes to make it the 8th generation. So where they live, they take in the air, they drink the water. And so they're being as regenerative as possible, where they're growing back and giving back. They're giving back to the earth, to the soil, to the water. They're also growing back, giving back, that make available to the world to both feed and fuel, and bring then lastly, the fiber for the world that it needs. And so this whole idea that the sustainability of farmers in the United States, especially the soy world, they've got some protocols in place that they're highly verified as being compliant to go into EU, for example. And there's other examples, like down in Indonesia, that there's the palm and as such for palm oil, that you're not going to go farm into jungles. And also you're going to protect the labor. These are things that we addressed in the United States years ago, thankfully, and we're way ahead of the curve. And so that reliability, it is important for the marketplace to have that resilience of a system really wrapped around that regenerative approach that we have in agriculture in the United States.
Ken, you touched on transportation just now, and you've become, as part of your work, you became part of a barge expert and learned and used to deliver the barge report. What about the investments that China's been making in South America in infrastructure? And is any of that eroding our transportation advantage that our U.S. farmers have?
The United States has a great blueprint for people to use. And people have been using that. Let's face it, it's not just China that's doing this. China's making investment in many places around the world. I would say that there's probably a lot of those investments that don't always see the light of day. A lot of good talk, maybe some ribbon cuttings, but do they really come to fruition? What you do see are multinational companies, and some of them are US based, and one of them is a farmer cooperative. And so if you think about the line of the ABCDs, the ADMs, the Bungies, you got the Cargills, and then the Louis Dreyfuses, might as well throw in these co-ops like CHS and others that have invested in South America and have taken infrastructure down there. And they've taken that playbook from the United States and moved it elsewhere. But China's come alongside because they've got their own C. It's called COFCO. And there's some other ones that they have that have gone in and make similar investment, not only in the grain handling infrastructure, but even in the transportation side, whether they've bought barges or towboats to move on not only the Paraguay River system, that was the first stop, but then on the Amazon, Tietê and Madeira River system up there, they've done a lot of work. And so you see that quite a bit in what they're doing and the way they're making that investment to try to recognize that you can get better sustainability by water, and you can get lower freight rates moving greater volumes simultaneously into a market position. And you're also seeing the development of rail and unit train rail going to some of those places in Brazil. They're trying to make for better movement rather than most here in the United States. When we're moving grain to export position, more than 60%, maybe 70% moves by truck, by barge. And then another 30% moves by rail. And then a small percent moves by truck in the United States. Let's flip that upside down in Brazil, where most of the grain and soybeans move by truck to market position. And they're using far more diesel, emitting far more emissions and CO2 into the air. And that doesn't always get accounted for in the equation. So China's made a lot of investments in South America. They've made a lot of investments elsewhere in the world, but there'd be someone to watch. The question is, how successful are they to fulfill and bring those to fruition?
So Ken, it sounds like what you're saying is carbon scoring gets more sophisticated and takes advantage of truck miles and things like that, that the U.S. has advantages in that area too, as well as in just cost of transportation. Is that right?
Yeah, and the U.S. advantage has always been its transportation because we can put it into the lowest cost and most safe, least amount of emissions mode of transportation in the United States, which is waterborne, the barge market, or then next is rail to go out either to the Pacific Northwest. For the high plains, man, the PNW is an important outlet for grain. So is the Texas Gulf. And so the rail has gotten much more improved, or has become much improved with how less emissions they have. Barge continues to improve by better fuels, better engines, and be able to move to market position. So you're seeing some of that. At the same time, those CI scores, there's some CI scores, the base is about 29.5 is the number. And if farmers are really adapting to, especially what 45Z is doing for the corn and soybeans, it's an important feature because 45Z is saying, look, we're going to look at your carbon score. And if you're able to lower it, there are some premiums in certain markets where you're going to sell your crops into. And the important part there is, are they really capturing then all the transportation too? And for the United States, we could probably see some of the best CI scores if we start including all the transportation and all the different handling techniques out there. It gets to be very important in that regard because you got to take a whole system approach and just not one aspect. The big aspect is at the farm level and what the farmer's doing. And then the next part of that for the farmer is how well are they able to track, verify, certify what they're doing on their farm? And then who is the one downstream, the grain handler, the ethanol plant, the soybean crush plant, or even other handlers, because the CI score is being asked from not just for different biofuels or renewables, but also from the consumer packaged goods companies or even the animal feeders. What's your CI score? How much have you lowered it so that we can communicate that further into our supply chain as we've tried to improve our system? So it's a very integrated system. It's integral to everyone's processes then.
That's fascinating, Ken. And how well are international groups that score carbon intensity taking account of all these things? And is it gathering momentum year to year?
There is. And some work I've been doing recently for a group on some interviews. In fact, I had last week with some folks. There is a stronger and more important aspect to this to be able to track these CI scores, because now you can start seeing the rewarding back to the farmer. Now, it's not all farmers are going to be able to participate. Some of it is the size of the farmer and the sophistication of the farm. What type of equipment do they have? For farms that are larger, that are able to bring in modern equipment, they've already got the capability to track or to identify where they're producing their crops and to show, okay, here's what we're putting on our fields as a crop nutrient or for crop protection. And now you can start working that through. And then also at the same time with how you're treating the field in the sense of cover crops, or if you're doing any kind of no-till and things, you can verify. That's important. For the smaller farmers, it's a bit more of a challenge because of some of the cost levels that are involved. And so that gets to be a challenge in that regard. But the equipment manufacturers, the nutrient and crop protection companies have done a good job to try to make that information as readily available. The question is, how will the farmers make that available? And there are some sophisticated systems using fairly low-tech approaches to be able to capture that information and to securely pass it downstream from when the farmer harvests it, moves it off the farm to the next location. That becomes more portable. It's just that the system is not completely and synced up to receive it right now, but there are great strides from one year to the next. And there's going to be some better incentives to make that happen. Part of it is because further downstream, the signal is we need to have that verified, or we need to be able to come in and do an audit to make sure that it works. And we're seeing more of that. And it's a global thing. And certainly because of what's going on in the EU and other parts of the world, as people want to eat better, and as people want to know where their food came from, they're going to be looking at the quality, or if it's a non-GMO, GMO crop, or if it's organic or specialty crop. Those get to be more important in that marketplace, especially as people start aging and living longer. They're wanting to look for what is that better opportunity. And there's a lot of countries like Japan and South Korea that are great analogs to see what they're doing to require some of that. And so to have that information readily available almost becomes second nature. It's like having a tractor. You have a tractor, you're going to have this information available as well, because it's just going to become part of farming as we go forward here.
Ken, you're on your way to Panama. Are you going to be talking about some of these things to your audiences down there?
Yeah, actually going to be speaking to a group down there with U.S. Soybean Export Council has what they call their CrushCon 25 for Latin America, and going to be speaking to the fundamentals of the oil seeds, edible oils, and meals, and speaking to what is taking place in the marketplace, and quite frankly, understanding what's the global perspective for oil seeds and edible oils and meals. What's the global production look like versus the consumption? And then what's going on by different regions around the world, what's going on by the different crops, and then looking at in the lens of, okay, economically, what's going on with that consumer. Some of the themes that we talked about earlier, as far as those different food wants, as far as eating better, having higher protein, or knowing where your commodity came from, gets to be so important in that regard. And then it's an oils event, a crush con. So you're speaking about crushing. What is that diet look like? But it's also about the meal. What's the livestock sector doing in those areas? And what's those different meal opportunities that are going to start to play out here? A good couple of days down in Panama where USEC will bring in multiple customers from all over the regions, Latin and Central America, and be able to hear about opportunities with U.S. agriculture, especially in the soybeans and soybean oil and soybean meal.
And Ken, before we leave, what's your final word to producers about how they can ride out the way all these changes we've been talking about?
Yeah, so many producers, they look first at the supply and demand balance table. They really need to be looking at their balance in their profit loss column and start looking at the balance sheet. And that gets to be important because from that balance sheet, you start working through your business and enterprise. What is my true cost of production? What am I doing in my business as a farm to maximize my opportunities? Is it about maximum yield, but at what cost? Or is it about, hey, achieving a good crop, but not at the highest cost, but for maximum revenue opportunities and to get the best marginal revenues for your business? And that gets to be an exercise that farmers need to do. These are some challenges. These are have been low price environments. You've got a lot of challenges with policy that we see. And as we talked earlier, Dave, about US-China, there are still some things going on out there. At the same time, within the United States, there's still a lot of livestock production, especially broilers. And for the soybean market, soybean meal is so important to the diet of broilers. And the consumption of poultry meat just continues to increase on a per capita basis at still a fast pace relative to pork. Pork is relatively flat. Beef has ticked up a little bit here, but you watch what's taking place with the consumer. Man, they love their chicken. They love their chicken sandwiches. Those wars just seem to still go on. The chicken wings, you've got the different activities with bowl season coming up, the Super Bowl, and you get the Final Four. All of that comes around that chicken.
And Ken, the global chicken consumer is rising too, correct? It's not just in this country.
That's exactly right. And it's a great alternative protein. Every 6 to 8 weeks, you've got a new bird available to the market in an edible form. And certainly the quality of it, the consistency of the crop, the bird is important. And so from that standpoint, Dave, you're exactly right. There are many opportunities for poultry and broiler meat in the global marketplace here. Pork, again, some of it is due to religious or social traditions, but then with the beef, there's similar issues, but poultry, there's more opportunity. At the same time, aquaculture continues to expand, and you're putting meal and other U.S. ag commodities into aquaculture around the world, and people continue to eat more and more aquaculture, food from the water that gets to be important as an important protein source for a diet.
Well, when I was a kid, I remember that salmon was a rich man's occasional delicacy, and ordinary people hardly ever ate it. And now it's very common. So
Yeah, especially when you
it's
look at
thanks
the
to
price
soy
of
meal.
beef.
Yeah, thanks to soy meal. So, Ken, thank you for speaking with us. Thank you for helping out the producer with all your advice. And I know that you'll have a productive and engaging time in Panama.
Thank you, Dave. It's a pleasure, and I look forward to working with you further on here.
Thank you, Ken. And with that, I think we used up. The only reason I wound it up is I kept saying, "Notice this, Ken. This isn't going to be part of the thing." But I kept saying 5 minutes to go, so James can edit it out and add in Kylie's introduction. And
That's
thank you for. Did we miss anything you wanted to talk about?
No, I think that was
you
great.
got it all in there.
Yeah, we covered a lot of territory.
So
We didn't
thank
get to
you.
the livestock production side in the United States with the cattle beef situation and all that, but
No, I know we didn't get into that too much, and there's been a lot of attention to that. So maybe that's another podcast.
yeah, and I tell you, Dave, some of the things I've written with the High Plains Journal on the cattle market, and just blows me away that there's always cycles in cattle, but it seems like that trough goes deeper and the peak gets lower, and it takes longer to get out of a trough, and it's quicker to get to a peak. And
Is it because the capital is tied up for longer periods before you see a return than with other forms of livestock?
it might be a good one, because at the same time, the farmer, the rancher, goes through that cycle, and he's looking at the weather. He's looking at how cold or hot it is, or how dry it is, and trying to get an idea in the market. What you think about raising cattle, 24, 36 months to get into market, whereas a hog is 18 months or so, and then chickens 8 weeks. That's a big difference. So you look at that. So that capital gets to be important, what you just said, and that's a tough one in that regard. But it's that cycle, and we're seeing record imports of meat, of beef, that helps the planet. At the same time, each of those cows is getting heavier, or cattle. Each one's getting heavier going to the slaughter plant, but there's only there's a maximum size that can go to a slaughter plant before it's too big for the hooks, or what they call them. So the shackles, pardon me. And at some point, you can't breed them to be any bigger, is the problem.